Hi there, welcome to Kneppy Invest. By far, my favorite sort of announcement is a profit upgrade or downgrade. But following just closely behind that sort of announcement is a trading update. So you probably could argue that all profit upgrades and downgrades are trading updates, but not all trading updates are profit downgrades or upgrades. And in today's video, we are going to be focusing on four companies that have released trading updates or a quarter report. And I actually do consider quarterly reports to be trading updates because these reports are showing you how a company has performed in the past 3 months. And we have seen a plethora of trading updates released over the past 3 trading days since the start of this trading week, beginning on October 17th. So it is obvious that the management of a lot of companies out there are looking at how the companies have performed for the first 3 months of the year, and perhaps the performance of the companies have exceeded expectations or are a little bit short to expectations. And sometimes based off the performance of the company during the first 3 months of the financial year, or maybe the first 9 months of the financial year, depending on financial calendar, some of the management teams of these companies are getting a better idea of how the company might perform for the rest of the financial year. So in today's video, I'm going to look at four companies that released a trading update or a quarter report during the first 3 days of this particular week. And these announcements could be considered good, bad, or downright ugly. First company we're going to look at is one of these really ugly trading updates released by Adbri. Now, I know this company is Adelaide Brighton, but some smart Alec thought, let's go through a name change and let's just take the first 2 letters of Adelaide, the first 3 letters of Brighton, and just squish them together to come up with our new name. And probably were paid $100,000 to come up with that idea. Unfortunately, Adbri did release a trading update on the 17th of October and a leadership transition alongside that. And the market absolutely hated it, with the share price falling 22%. Not only did it fall 22% on the 17th of October, it fell another 4.5% on October 18th. However, the share price has rallied on October 20, rising 6% on this particular day, even though the overall market is down 1%. So I'm just focusing on the trading update in this video. I don't really care about the leadership transition, but potentially the leadership transition is the most important news item of this particular announcement, particularly for the long term, because if they get new management in who are really good at that job, potentially this is the bottom for Adbri. Anyway, lots and lots of headwinds this company is facing, and they made sure that these headwinds are called external headwinds. So the management of this company have no control over external headwinds. So there is inflationary pressures, and earnings have also been impacted by ongoing wet weather conditions affecting volume and cost, and an escalation of input and operational costs. It's really fascinating the amount of companies are blaming wet weather. I didn't actually realize how many companies are affected by weather. It seems to be a lot, because a lot of companies are at this point in time blaming the wet weather. So probably most of these companies are wanting a drought, and more than likely we are going to be in drought in 2 years, no doubt. And they actually did give a number in regards to underlying net profit, expected now to be between $75 and $85 million for the full year ended 31st of December. So this company has a financial year that is identical to the calendar year. They also mentioned that the demand environment has remained robust. So those interest rate rises haven't affected the demand environment, which is not what the Reserve Bank in Australia wants to see. They want to see the demand environment being impacted by the rising interest rates. And then they go on. However, extreme rainfall events and ongoing inflationary headwinds, particularly energy and diesel costs, have continued to impact margins. They then go on to talk about they have implemented out-of-cycle price increases, but they have not met ongoing cost inflation. So even though they have a little bit of pricing power, they haven't had enough pricing power to meet these inflation or the inflation the company has seen over the past few months. Now onto the chart for Adbri or Adelaide Brighton, and this is the monthly chart going all the way back to 2005. And the reason I go back that far is because the current share price of Adbri at around $1.50 is at a decade or even a greater than a decade year low. In fact, during the GFC, the share price of Adelaide Brighton fell to $1.50 and then it bounced. So this is a multi-year low for the company. At its high point, Adelaide Brighton or Adbri went to a high of $7, and that was in 2018. But ever since that high in 2018, the share price has been falling, apart from a little bit of a rally after COVID-19 financial panic. So right now, maybe there is some value in Adelaide Brighton or Adbri just based off the 15-year chart here. Maybe the share price is oversold, and maybe with this new leadership, this is a low for Adelaide Brighton. I keep calling them Adelaide Brighton, but they are Adbri. Next company I'll look at is Costa Group. And this was really interesting because when they released their trading update on the 17th of October, the share price dropped 13% on this date. But then the share price rallied the next two trading days. On the 18th, it rose 7%. And then on the 19th, it rose a further 4.2%. So even though on first look, this could have been or could be viewed as a negative trading update, I think there were some investors, maybe some fund managers, who saw some blue skies, some good things within this trading update, and that's why the share price did rally. So they did mention here that they currently expect full-year EBITDA for the group to be marginally ahead of last year's results. So you could say that's okay news. While they do not expect additional material impact from recent heavy rainfalls experienced across the country, further downside risk is possible if extreme adverse weather continues. Now, it does look like the La Nina, which has brought us all this heavy rainfall, or has been the major reason behind all this heavy rainfall, combined with the IPO, that could be coming to an end fairly soon, like in the next few months. So maybe the heavy rain we are experiencing right now in the last few months is coming to an end. And maybe that's why the share price of Costa Group did rally in the last few trading days. And they also mentioned here, notwithstanding the EBITDA being lower than previously forecast, debt levels and related ratios remain comfortably manageable for the group. So even though this does look on first glance a negative trading update, the market has seen some positive upside to Costa Group, and the share price has rallied over the past few trading days. As we take a look at Costa Group's chart, and this is the long-term chart, actually, in fact, this goes back to when the company listed on the ASX back in 2015, and a fascinating chart because Costa Group was a market darling. For the first 3 years they were on the ASX, share price went from about $2 all the way to a high of $8.60. So this was a four-bagger for those who held on strong. But that share price high was in 2018, and ever since 2018, or the middle of 2018, the share price has been pulling back on continual bad news from the company. There was a brief period of time between the end of 2019 to the middle or start of 2021 where it did look like the share price of Costa Group wanted to move into an uptrend, but that failed again on the back of some negative news. But it's really interesting now the share price is at levels that we saw when the company IPO'd. So the share price has gone nowhere since it listed on the ASX, even though the share price quadrupled at one point. Now it's pulled back about 75%. So the valuation of Costa Group could be looking interesting, particularly if the company sees some tailwinds come into play. So the company has experienced a lot of headwinds over the past 3 or 4 years, and eventually I think the company will start to see some tailwinds, and they will start to see the financial performance beating expectations. And I think when that happens, I think eventually it will happen, that's when you might see the share price starting to rise again and move into an uptrend. So far, we have looked at one really ugly trading update from Adbri, one bad trading update from Costa Group, but on second or third glance might not be quite as bad as on first glance. And now we're looking at a good trading update released by Hub24. This is based off their first quarter results of financial year 23, and this was positive, and that's why the share price rose 14% on the back of this. Now, the share price of Hub24 has been hit by the general tech sell-off over the past 9 to 12 months, but this was a good report. Strong platform net inflows of $3 billion, broadly flat on previous corresponding period, down 1.6%. Total funds under management of 68.4 billion, comprising platform FUA of 52.4 million. That's up 15.4% on previous corresponding period, and portfolio and administration and reporting services FUA of 16 billion, down 9.9%, and that was blamed on just the market movement. They also awarded Best SMSF Investment Platform by Advisor Choice. So a fairly good trading update or market update from Hub24. And if we have a look at the long-term chart for Hub24 going all the way back to 2013, this has been a success story on the ASX. Share price of this company has moved up a fair bit. In fact, it's increased from about $1 to a high of $35. So that's a 35 bagger for anyone who has held this company from 2015. Of course, there's been a little bit of volatility. During the COVID-19 financial panic, the share price of this company fell to about $8 or $6, but then was a six-bagger in a fairly brief period of time, just over 1 year. But the share price has pulled back from that high of about $35 all the way down to $18. So share price almost halved, but we have seen the share price of Hub24 rally since that low we saw back in June. So it does look fairly positive, particularly in the past week for Hub24, and the majority of this positive sentiment is because of this positive market update the company released on the 18th of October. 19th, was it 18th or 19th? 19th of whatever date it was. So far we've looked at an ugly, a bad, and a good trading update. Now we're going to an extremely ugly trading update from St. Barbara. This is their quarterly report, and the share price was absolutely punished on this day by 22%. Interestingly, the day before they released this quarterly report, the share price was down 8%. Loose lips, who knows? But then the share price fell another 5% on the 19th. So they released this quarterly report on the 18th. So down another 5% on the 19th, and now down another 8% on the 20th. So when you see the share price absolutely hammered over 3 days of trading, you know the report is bad. So why is this report bad? And the thing that really sticks out to me, and the thing I always look at with mining reports or quarterly reports, is I focus on two things: all-in sustaining costs and realized gold prices. And all-in sustaining costs for St. Barbara in the first quarter was $2,490 per ounce, which is considerably higher than the previous 4 quarters. But not only that, the realized gold price was $2,486 per ounce. That means to get the gold out of the ground cost more than they could sell their gold for. So in a way, you could say their mining operations were not profitable at all. And that's why the market had absolutely hissy fit with St. Barbara's quarterly report. And that's why the share price is considerably down. And down, would say at this point, down about 40%. We'll say between 35 and 40%. Now let's have a look at a really ugly chart for St. Barbara. This is the monthly chart for St. Barbara going back to 2002, and it's an absolutely fascinating chart and a perfect example on why I don't like to hold mining companies for the very long term, because they are price takers, and the price and the share price of these companies can be highly affected or influenced by the underlying commodity price. And St. Barbara's share price has been, over the last 20 years, affected by that. So what I usually do with mining companies is I wait for a shift in sentiment. And over the last 20 years, we have seen violent shifts in sentiment with St. Barbara. So the share price of this company has swung between $5.25 and 25 cents on numerous occasions. So if you go back to 2003 and 4, the share price of St. Barbara went all the way down to 25 cents. And then in the next 2 years, share price went from 25 cents all the way to a high of $5. And then it fell from $5 all the way back to even lower than 25 cents back in 2014. So again, that was affected by lowering or lower gold prices. And then gold prices started to rise, and that positively affected St. Barbara's share price. And that's why the share price of this company went from about 10 cents all the way back up to $5.25, which was reached in 2018. And ever since then, just lowering gold prices, not all the time, but we have seen lowering gold prices, particularly in recent months, but also bad performance from St. Barbara's mines have seen the share price of this company drop from $5.25 to a current share price of around 46 cents. So the share price right now of St. Barbara is moving towards the levels. I would actually think about taking a position if the company can turn things around and if the first quarter was only a one-off. I don't want to see the second quarter to have the same issues that they experienced in the first quarter. I want to see the company selling their gold at a higher rate than the costs. Because if they can't sell their gold for more than the amount of money they're spending to take it out of the ground, this company has no value at all. So I'd like to see those signs. And that's why the share price has fallen significantly since they released this trading update or this quarterly report. On October 20, so I'm recording this video just after trading has finished for the day, quite a few other companies released some trading updates or quarterly performance reports, those sort of things. And I was going to include these 4 companies in this video, but I might leave it for another video. And interestingly enough, 3 of these reports were positive. From pure profile, I think the share price rose over 30% for that company. Auckland Airport, it's looking more and more positive for not only Auckland Airport, but also Air New Zealand and Enero released their quarterly report, not quarterly report, but they released a trading update on the first 3 months of the financial year, and it does look pretty good for that company. Share price of Enero and Auckland Airport did rise, but not quite as much as pure profile. Unfortunately, Redbubble released a trading update, and it was another ugly one. Share price down about 26 or 27% for that company. So look out for a video where I will be featuring these 4 companies. Look out for that video probably in the next week or so. So if you do have any questions, any thoughts, maybe you think I'm wrong and anything I said in this video, I'd love to hear your thoughts, your opinions, your questions. So leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.